Hello, everybody. It's Sunday Q&A time. Today is an interesting video, a banger of a video. And strangely enough, nobody is asking questions about Bitcoin. It's as if the temperature in the room has completely changed. Guess what? Yeah, you guessed it. How to survive the future onslaught, how to hedge, how to pair trade AI, and are there threats coming to some of our favorite assets? This video is like 7 videos in one. So we're going to go real fast as usual. And thank you all for coming. And thank you to the mods in the chat too. And not financial advice ever. Some of the stuff I'm going to go through today is actually very, very technical. I work on this with the gang for the last 2 days. So beware. And all the questions come from Patreon. Big thank you to everyone on Patreon too. First question is from CSB Crypto. Hi, James. I have a heavy weighting Solana, approximately 90% of my portfolio, and I'm now building a Tesla bag on the spot market in a tax-free vehicle. I have a small Bitcoin holding and a degen bag, which has suffered badly in the recent drawdowns. I want to reduce my Solana exposure to clear some of my mortgage debt, which is now being affected by higher interest rates. What is your outlook on Solana in the short term? Interesting question. Solana for me has been a head scratcher for much of 2025. Well, let's just look at some of the data and what exactly is going on the chain and why is it trading at less than a fifth of the market cap of Ethereum? Another head scratcher, by the way. You know, Ethereum for me in 2025 was like Cardano in 2021. You know, I mocked and ridiculed Cardano in 2021, and I did a little bit of that in ETH as well. But let me just share with you some data. And to anybody from the outside looking in, if you're not in crypto, you'll understand this data. First of all, this is Solana. And the reason I mentioned prediction markets first, because prediction markets are red hot, everybody. Prediction markets are key. But Solana is the leader in prediction markets. Base number 2, Polygon number 3. And that's interesting. Then let's look at revenue. Stop. Sorry about this. We just have to go on. So, hang on a second. Okay. Threw her about, literally. Anyway, the dog is alive and well. That's only spooked her. All right. Top 10 chains by revenue in 2025. This is all the revenue for all of the year 2025. Number 1, Solana. Number 2, Hyperliquid. Number 3, Tron. And number 4, Ethereum. Solana does 3 times the revenue that Ethereum does, despite Ethereum charging a lot more. Binance there, number 5. This is just, again, another point of view. You take the data, do with it as you will. Another view of top blockchains by revenue. Again, from a different source, but again, tells the same picture. Solana is the leader. Then another key narrative, probably the top narrative, I believe, for 2026 will be the tokenization of everything. Call it real world assets, you name it. But the real world trading volume has surged to nearly $900 million, nearly $1 billion on Solana. And it's completely dominating all tokenized trading of stocks. And actually, there's a lot of people in the audience that their first buy of a Tesla share was a tokenized version, not even a real version. And there are risks with tokenized shares too. And remember as well, each real world asset trade on Solana burns a small amount of Solana, reducing the total supply. And that creates a deflationary pressure on the asset too. So good stuff there. What else do we have in the kitty? Institutional inflows. I'll put myself in the top left here again. ETFs. Literally, since the beginning of December, not one red day, while Bitcoin and Ethereum had a lot of red days. Somebody is stacking this. Somebody is telling their clients, get some of these spot Solana ETFs. Again, everyday green through some very, very rough times for crypto. Why is that? I'm not sure. But traditional investors are investing in Sol directly via traditional finance channels, i.e. no crypto wallets, which scares a lot of TradFi as well. And that is, you know, a huge amount of money coming in, trickling in every single day. And that is a huge new buyer that never existed before. You know, retail crypto has no money. And I do believe this alone will push Solana price north of $200 in 2026. Not a lot considering the all-time high is nearly $300, but just this alone will push the price to $200. And finally, unmatched scale and speed and low costs anywhere out there. I do believe Alpenglow is the death blow to Ethereum. Very few people understand what that is. I covered it before. But the only thing that sucks with Solana is price. Again, Solana processes billions of transactions in fractions of a second at sometimes almost free. And it is the fastest, cheapest blockchain out there. It's ideal for DeFi. It's ideal for tokenized assets. Other volume use cases like stable coins. I nearly forgot to say stable coins for a second. And remember, Firedancer is up and Alpenglow is being adopted. And you still have the fuzzers out there saying who's going to have an outage. An outage is now a thing of the past. It can't happen and hasn't happened in 2 years. Anyway, we'll get to 150 milliseconds in speed and finality, which is key for trading. And that's what's going to happen. I think 2026 could be a good year for Solana. There you go. It's in my 2026 predictions as well. My video I did, I think, on New Year's Eve. So, you know, you don't want to sell these assets at the bottom. So find something else to sell. But you do have a 90% concentration of Solana, which is dangerous. Therefore, you got to do something. Yeah, I don't know what to say. You're kind of a little bit boxed in. And remember, allocations matter. Even if you are 1 billion% bullish on something, you should never be all in on it. Simple rule. Anyway, next question. Tommy, is only having 300 Tesla shares really enough to retire like it's nothing more? Thank you for everything. Yeah, I've been saying this for 5 years now. Everybody get to 1 Bitcoin, everybody get to 300 shares, et cetera, like a broken record. Why did I anchor on 300 shares? Well, because of my retire on models. And by the way, my retire on models have just been codified into a web-based application so you can run your own simulations. Very simple. Let's go through a couple of things real quick. And again, thank you all for coming. It's less than 1,000 people watching this video, so people are just jaded, I guess, with the markets and everything else. But hit the like. We need to get this message out. And if you do like the video, it makes other people watch it, like-minded people like you. There's some very important nuggets coming up as well that are very important for you all in the future. But let's look at my Tesla price targets, CAGRs. These PTs, by the way, have been around for years. My 8,000 bull case for Tesla, I did over 3 years ago, and it's still valid today. In fact, I've gotten even more bullish. But if you look at, especially since the comp plan, because that took the price up to 12K. Anyway, enough of that. You can take any CAGR you want. I'll show you how to manipulate it. If you imagine my 2032 target of 2,681 with current price 445, that's a 7-year CAGR of 29.25%, which means your bag goes up 29% on average per year for 7 years. That is my bear case. You go to anybody in TradFi, you say that to them, their hair will go on fire and they'll think you're smoking crack. Okay, it's just wild. My expected case, 42% CAGR. Bull case, 51.6% CAGR. And then the comp plan, 61%. And the average vol is 48%. Pick your CAGR, pick your number, get to 300 shares. Now, Cern Basher, friend of the channel, also models the crap out of Tesla. I've been modeling the crap out of Tesla since 2017. And I'm sure Cern has as well. This is important. When we look at his target for 2032, it's over 15 grand. So what happens when we insert Cern Basher into my model? You'll see his 15,102 target for 2032. That's a 65.45% CAGR. Now, let's punch these numbers into our little handy dandy fun model. Again, the key to retirement is planning, planning, planning. Planning, planning, planning. Have I hammered that enough over the years? Make a target, make a goal, work towards it. I cannot stress that enough. And if you can get into a winning asset early, hold on to it. Very important. And there's some violent swings. It's like being, in a storm in the ocean, but you just have to buckle in and hold on for dear life. Let's look at the retire model. I'm going to turn my camera off so you can see all the screen. This is now available on the internet. 300 shares with my bear case. That is the CAGR of, what did I say it was? 29%. That will take 300 shares, from the current price to 804,000 in the year 2032. You just punch in the number of shares, you punch in your CAGR, and if you want to punch in when you want to retire, when you want to start drawing from your bag, you can punch that in too. You can index it all. You can play with different scenarios. That's all here. Now, let's go a little bit crazy. Let's assume Cern Basher is right. If we use Cern Basher's CAGR number, that's his CAGR again, a 65.45% from the price today, takes the stock price to 15,102 shares. What does this do with 300 shares? You have a $4.53 million bag in 2032 if Cern is right in his predictions. This is why 300 shares is life-changing, my friends, and why I've been hammering the table on this for years. And I guarantee you, I have probably created at least 10,000, maybe 20, 30, 40,000 people from watching my videos that now have 300 shares, and they will not let them go. I also know people that have 300 shares, not only for themselves, but for their kids. They have 100 shares for each child, which is like having Bitcoin at $2,000 way back when. Anyway, 300 shares, Cern's model, 4.53 million. 300 shares on my bear case, 804,000. 804,000 is not life-changing, but if you lead a frugal life, it damn well is. And that's important. So let's move on to the next question. Thank you for that question. The new mayor of Crazy Town, Micron Technology, keeps making all-time highs and is up 250% in a year. Grok likes it. Do you? Yeah, I do like Micron. Does it mean I buy it? No. Let me tell you the reasons why I don't. First of all, I have 100 rules, very strict rules that I've learned over 35, 36 years of playing this game. I do not chase, I replace. You know that from me. Second, I prefer cheaper valuation stocks with the same growth. I compare all to each other. We'll get into the IA9 in a minute. Also, it looks overbought on the chart. There's tons of options hedging, so I'm not the only one that thinks that as well. Samsung is a formidable competitor too. And a key part here, this is one that many people may not be aware of, but we have a company called NVIDIA, and they are coming to market with a thing called Rubin. They're piling into the space, and they are working with friends at Samsung. Okay, so that means NVIDIA plus Samsung, and Samsung, I made a Patreon post on Samsung the other day as well. Huge capability. In fact, all the valuation of Samsung is now driven around this high bandwidth memory. And they are moving into a head-on battle with Micron and SK Hynix. The question you have to have for yourself is, who do you bet on? In full disclosure, I don't own Samsung or Micron or SK Hynix, but I do own NVIDIA as well. So that's why I don't touch Micron right now. Next question. And this one is kind of a deep question. And it's tricky, and there's a lot of people in this situation, but I'm going to tackle this one too, because it's very, very important. Unemployed and need to build cash. SH from HK. Hey, James, I'm a 35-year-old and I've been jobless for over a year. Job search has been painful. Nobody wants me. When I offered pro bono service, I will vent somewhere else. My cash reserve is starting to look dangerously low. I live in central London. By the way, very expensive place to live. Control your burn. Mortgage payment, $1,600 a month. Taxes, utilities, service charges total $1,000 a month. Bare minimum, I need $2,600 a month just to keep a roof over my head. Let's add in another $1,500 to live, and you can add those together. You're talking $4,100. My portfolio is 66% Tesla, 21% Bitcoin, 4% Sol, 3% MicroStrategy, and 6% others like Palo Alto Networks, HIMS, Rocket Lab, etc. Rocket Lab has done well for you. I don't feel comfortable sharing the exact amount I hold, but I have definitely achieved your goal of holding more than 300 Tesla shares. Good job. If you're in a situation where you need to build cash as soon as possible to last for 6 months, what would you do? What assets would you reduce or sell or swap? I am planning to build enough cash to last for 6 months and then revisit in 6 months' time, and hopefully the stock market will be higher. Thank you. This is a very stressful time in my life. Well, the good news is you have bags and you can make money off your bags. Again, I got my start in the 90s by selling covered calls, and you have that way out. What I would do in your situation, try not to sell these very precious assets, but watch when I sell covered calls. Watch how I do it. Look at all our training videos. Look at all the videos from Jacob. Look at all our fireside chats. We did a very detailed fireside chat last Monday, nearly 2-hour video on covered call selling, how to do it. And we have another one, advanced covered calls and options, on the 2nd of Feb as well. Check those out. Watch all the videos. Watch the trade alerts. Okay, this will enable you to sell covered calls safe and effectively without getting called out. And I do this, as you know, and I've been doing it for 35 years. And that becomes your own private money printer. That would be what I would do, not financial advice. But to do that, you need to be very patient and have very good technical skills, technical analysis skills. So I could spend a long time answering that, but we've covered all of this and how to do it in many, many, many videos on Patreon. Check them all out, and good luck out there. And don't let stress eat you alive. And there's always something somebody can do as a side hustle, become a property manager, do, Uber driver, whatever. There's tons of ways to make money out there if you put your mind to it. Don't feel that you can do it. Your only way to make money is to pick the job of your dreams. That's not true at all. So I hope that helps. Next question is Moonshot. I love the name Moonshot. Hey, James, appreciate all you do and team do. I've done well pair trading Tesla and MicroStrategy in the past. Do you think it's possible to pair trade some IA9 stocks, or are they too correlated? Brilliant, brilliant, brilliant question. Brilliant question. Let's look at a couple of things. Let's have a look. What I would do, and what I did do, is, first of all, when you look at a sector that is correlated, but also a sector that has exploded. I mean, you look at the charts of Micron, etc., and the valuations, they have just gone vertical over the last year. It's difficult to be concentrated in a pair trading bag like that because they run so hard. Remember at the very beginning, I mentioned I don't chase, I replace, for exactly that reason. But let's check the correlations, and then let's check the Sortino ratios. What I want to do here is identify those IA9 names that do not have high correlations. And then I want to weed out the top performing Sortino ratio assets over the last year and see what we come up with. So first of all, these are the correlations between all the different assets in the IA9. When it's a correlation of 1-to-1, it means it's perfectly correlated. That's why you'll see a 1 across from NVIDIA and NVIDIA on the table. You want to look for the light green, lime green colors. They are the ones that are least correlated. For example, ASML and Palantir, or Palantir and Google. Interesting. Palantir and Micron. They are not as tightly correlated as other ones would be. For example, let's pick a high one. TSM and ASML, very highly correlated, obviously similar businesses. Broadcom and NVIDIA, very highly correlated for obvious reasons. The closer they are to the business that they do together, the more they move together. ARM and NVIDIA, same thing. TSM and NVIDIA, same thing. You'll see that NVIDIA is very closely correlated to many of them, with the exception of maybe Tesla. NVIDIA and Tesla do not move together. So if you had to pick two, that could be one you'd look at, or ALAB and Tesla is another very good one as well to look at if you're just pair trading two stocks, but we like to pair trade more than that too. Let's go to the top Sortino ratios over the last year. Palantir, number 1, Micron, number 2, Broadcom, number 3, ALAB, number 4, and NVIDIA, number 5. I forgot to add, I replaced Micron with Google because it has an even higher one, but the chart is not up to date. That should be Google. It's about 2.6. But let's now compare that, and we put these into the rotation model over the last 338 days. And the key to this model is we take the trades of Google, Palantir, Broadcom, ALAB, and NVIDIA, and we pair traded them over the last year or so. It started with, I think, 100 shares each. The bag was worth about $64,000. And if you just held the 100 shares each or whatever of these assets, your final value would be go from 64K to 221,000. By the way, that is an exceptional return in 300 trading days. That's 242.4% return from just hodling. If you rotate between these assets, basically when one spikes, you sell it and you buy one that's beaten down. And then when that spikes, you sell it and you buy one that's beaten down. Then if you rotate these, your bag will go from 64K to 400,000 and your return will be 521%. That is good. So can you pair trade the IA9? The answer is yes. Yes, you can. Another blow up version of the actual results. Again, the rotation model is the most complex financial trading model we've ever built. I always stress as well, it's like flying a 747. The only thing you need to do, okay, to be proficient at using this model, you need to pick the right assets that are not correlated and that have a very good Sortino ratio, but you have to pick winners going forward. You don't want to pick an asset. For example, Palantir. Imagine Palantir has had a great last 2-3 years. If that goes down 60, 80% over the next 12 months, that is not one you want. You have to, the hard part of this is picking the winner over the next year. And I believe those are pretty easy. Things like NVIDIA will continue to win. Tesla will continue to win. I think A-Lab will continue to win. Broadcom will continue to win. This would be where I would play and start. Palantir, not sure. Okay. Hope that helps everybody. Remember, it's not a beginner tool. It's a very advanced tool. Next question. Hudson the dog. Hello, Hudson the dog. Nice black Labrador. I just watched a video about NVIDIA's Alpha Mayo. It sounds like Mercedes-Benz has been partnering with NVIDIA to create their own full self-driving system. Do you think Mercedes and other car companies have been quietly working with NVIDIA, adding NVIDIA's hardware boards to their vehicles to drastically cut down development time and better compete with Tesla FSD? A little worried NVIDIA is not far behind Tesla. This is so funny. Let me just rip this thing apart, okay? If I was concerned, I would rotate some of my Tesla bag into NVIDIA. But no, I'm not, or even buy Mercedes. But let me just break it down. First of all, it's funny. And I'm just going to, I could pick 100 different points as to why it's comical, but I'm going to go through the big ones that I see. First of all, legacy OEMs. They depend on sometimes, in some cases, 220 different suppliers. They don't make stuff. They assemble stuff. They say, can you make me a seat? Can you make me a dashboard? Can you make me a chip for the controller on the electric seat of the car? Can you make me a chip for the radio system? Whatever else. They do not have software-centric vehicles. In order for FSD to work properly, you need a ground-up built, absolutely software-centric vehicle. You look at the work that Waymo has to do. They got to take a $80,000 car and put like $100,000 into it to make it work because of a lot of hacking and hard wiring. That is the difference, okay? Legacy OEMs build stuff. They don't build stuff, they assemble stuff. And also, by the way, Mercedes is a luxury car, expensive, and the CLA, I think, is the model. They sell 10,000 units a year. We'll get back to that in a minute. Also, the competition, these legacy OEMs, they don't have compute. They do not have Cortex. This is the Cortex training center for Tesla in Texas, by the way. These OEMs do not understand AI, and they definitely don't have any AI talent. They can't even make your sound system work in the car. They got to get it from whatever, Apple Play or one of those vendors. I don't even know. Also, shout out to Jensen Wong. You know, he pumps this thing. Why? Like every OEM car maker on the planet, to license their chips. Not only their chips to train, like we saw in Cortex here, but also to put them in the vehicle. And 7 to 8 years ago, Tesla realized we can't afford, remember, affordability is everything. We can't afford NVIDIA chips for inference in our cars, so we had to build our own. And therefore, Tesla has an 8-year head start in building their own chips. And AI5 is coming, then AI6, 7, 8, etc. They are far, far ahead. If a car maker is beholden to NVIDIA to buy their chips, the car will be unaffordable out of the gate, period. Very simple. Also, edge cases, March of Nines, whatever you want to call it. Tesla, Elon Musk said actually the other day, January 7th, you need 10 billion miles of training to achieve absolutely safe, unsupervised self-driving. They will get there in 4 to 5 months to weed out all edge cases. Okay, and Tesla make 2 million Model X and Ys, Model 3 and Model Ys this year. That's the type of X to be a 3 and Y. Merck will make 10,000 CLAs, and I calculated it will take Mercedes at least 20 years to catch up to Tesla to get to 10 billion miles, assuming everybody in every CLA has their version of FSD. And again, to get to that March of Nines. Elon is not worried, and either am I. This is not the bread and butter for these legacy OEMs by no stretch of the imagination. But I got one more good one too. NVIDIA solution needs LiDAR. So they're going to have to put LiDAR on the Mercedes CLAs, which adds even more cost and expense. Okay, that's the kiss of death. And then my joke here is, got him. That's this guy. Got him. Got the legacy OEMs to do their solution. It's just not going to work. It's comical. And just this is from the Moonshots team. Elon said FSD will be 100x safer than humans in 5 years. 100x. It's already far safer than me right now. And I consider myself a very, very good driver. It'll be 10x, probably summer of this year, and then 100x in 5 years. And remember, this guy, Adam, I think is his name, he drove coast to coast, nearly 3,000 miles. He's done over 11,000 miles on pure FSD alone right now. But what's crazy about this is a seminal moment in time where we had the first ever transcontinental United States autonomous drive. 0 interventions across extremely difficult conditions. Things like ladders on the road, storms, huge floodings, maybe some snow, all that type of stuff. Very, very difficult. But it was done. And he went all the way across and then went all the way back. And now he's going all the way down. And he's still intervention free. Again, every road, every scenario, every edge case licked. This is what the competition can't do. And no, the competition are not coming. Okay. I know NVIDIA is formidable, but the cost of all of their stack, the legacy OEMs are about to die anyway, unless they can find a way to make their cars revolutionary and a lot cheaper. They're not going to make it. The math doesn't work. Okay, well, there's another question regarding that too as well, which is interesting. But we'll get to Massimo first, because everybody's looking for side gigs. Dear James, I live in a rural town in Western Australia where we had intermittent taxi service over the years. By the way, parts of Japan have that too, especially during blossom festivals and stuff. I'm very seriously considering getting a Model Y with FSD, as we have no taxis at the moment and the population is rapidly increasing. There is a serious good opportunity of being a Robotaxi pioneer as soon as unsupervised FSD goes live here in a year or two. Things are looking good on paper, but I'm a little bit anxious that this venture could present issues which I haven't accounted for. Could you play devil's advocate and try change my mind in regard to this opportunity? Feel free to encourage me too. Thank you for being so passionate about your mission. I'm very passionate, overly passionate sometimes. Thank you, Massimo. Love that handle too. First of all, I could give you 100 points on this, but you asked me to Steelman you. I think you're onto something here. I don't think it would hurt to try, but remember, buying one car isn't much of a moat. If the population is growing and it is available in Australia, it just takes another person to buy one Model Y or 2 of them to beat you. So your moat is not there, and that's a very important thing. Also, I don't know the situation in Australia, but it would be important to have Tesla insurance. I don't know if they're going to get it there. If they do, well and good. If not, you might be screwed. You could get sued if there's a problem. So insurance could be a mess in Australia. I don't know the situation on the road there. Also, it sounds like you're way out of town, and rural roads come with their own dangers. There could be gravel roads, poor markings. There could be kangaroos bouncing around. Even though Tesla FSD can detect cats and ducks and chickens crossing the road and stops for them, and I know it can also stop for a kangaroo, but who knows what could happen. I'm just trying to Steelman you here. One accident in a small town could end demand overnight as well. It could be a very conservative town. They don't trust machines or driverless cars. If something small did happen, people could freak out. Cash burn as well. If you buy now, you just make car payments, insurance, charging, maintenance, and you might get zero revenue if there's no approval of FSD in Australia. And then you still have to handle all the cleaning, the charging, the repairs. And I would imagine Tesla's service center, not that cars need a lot of service. I have a Model X that's 6.5 years old. It's never needed anything except for I got new tires at 50,000 miles. That's it. I think I broke one of the washer wipers in the car wash. Silly me, my mistake. But the service centers may be far away. And again, another big player could jump in. I don't know. It might be too early until we find that it's approved and there is insurance. They'd be the two things I'd look for. So, but I like the way you think. Charlie Saul. Hi, James. I'm turning 23 and from the UK, currently working in construction, which I know is safe and probably safe with AI. However, I'm thinking about pivoting into financial advising, taking my courses and working my way up in that field. I feel like this may go against your advice, feeling pretty stuck as I don't enjoy construction and I could always go back if it doesn't work out. What would you do in my position? I do love math and everything to do with investing from watching your videos. That's a good start. That's half the battle right there. And I've been starting to learn pair trading on steroids and options trading. But again, I'm worried this isn't a long-term career with AI advancements. Great stuff. I love this because I like the way you're thinking. And I think I answered a question last week or the week before, something similar. You're very young. Your greatest asset is time. That's absolutely super exciting. Oh, to be young again. People, when you get to my age, you do anything to be 23 again. But the traditional financial advisor role is rapidly evolving due to AI. There'll be automated optimization, real-time analysis. That's gone. Don't even think about becoming a financial advisor. Dead. Finished. However, there is a huge gap for human coaching and teaching literacy in finance to other people. And what I mean by that, just imagine the people you work with in construction. They guarantee you they don't have a 300 share bag at Tesla. They don't even probably know what Tesla is. But that's a big opportunity, I think. So you could work. This is what I mean by a hybrid strategy. You're even though you hate your construction job, and I know it's tough, brutal, backbreaking, keep it up, make money, and then build a foundation as an education kind of side hustle. And that way you create an AI resistant tool for your personal brand and leverage your network in construction to teach those folks as well first. So you have that network. And a couple of ways to think about it is you're transforming from a kind of maybe a construction manager to a coach as we go forward. You know, set up a YouTube channel, work within the community like ours. You've got the math thing, you can excel at that. And start testing the waters, start working with your network, set up little weekly meetings with maybe guys you work with after work over a beer in a pub, teaching them finance. Sign me up. Also, what you can do too is don't knock construction entirely. Construction trades are AI resistant, at least for the medium term. And if you have a high demand niche in construction, like think electrical, plumbing, data center build out, etc. There are data center construction workers now in the US that are earning $250,000 a year. Don't knock that thing. But if you can find a way to set up a niche in construction and then build a team, okay, you have the experience. Now you can build a reputation for doing kind of niche jobs that are required and then ramp that business. That could be very lucrative. Again, I know tons of people that came to the US, had no skills except for maybe plumbing or electrical, and now they own real estate empires, literally just from building a team of plumbers, etc. So that is kind of really key. And remember, your roadmap would be you need dual track for stability, and I recommend everybody should have a fallback. Don't just wait to get a job. And if you do have a good job that's solid and not threatened by AI, hold on to it and explore financial side hustles like investing or advising or teaching, etc. Bridge your skills, bridge your network, and go for it. That could be very good. Hope that helps. Next is from Southern Investor. Thank you for teaching us about SLs and your rule du jour about margin magic. You mentioned the possibility of using margin to exercise leaps. However, do you use margin for securing the puts that you sell for those synthetic longs? From my understanding, using margin, securing puts can have a higher risk during downturn. And you getting assigned can be both end up using margin, which can be costly. So this is a super good question. Yes, I do. I use margin for all put selling. I do not do cash secured puts ever, not in years, not since the 90s, because they reduce capital efficiency and returns. And I'm very focused on very, very good returns. Instead, I sell puts near market lows, and as prices recover, put premiums decline. So the value of what you sold goes down, which is good because you sold it. And the margin requirements also decrease. It's a double-edged sword to your benefit. And this makes for a killer return on capital. But never, ever, 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 ever do an SL unless it's at a real market bottom. And you saw me go nuts way back in the past, in 2022, with MicroStrategy, with Tesla at 106 and stuff like that. They are the prime opportunities. Otherwise, wait, be very patient. And if you do an SL on an asset as a flyer, make sure you only risk a tiny, tiny portion of your bag. I'm talking 1% or so. Consider it like running a perp. Very high risk. So I hope that helps. Hobbit. GM. Good to see you again, Hobbit. GM. In setting of legacy car makers being doomed, looks like overvalued IDSS flashing a sell on a daily and divergent trend on mean reversion. I bought puts on GM and price moved up even more. Do you ever consider shorting legacy car makers, or is the thesis a long-term, too slow to play out scenario where faster horses are better bets? I like the way you think, but you got to remember, companies like GM, they just borrow government money, and any money they make, they use it to do share buybacks to prop up their stock price, because that's how the executives are paid. Consider it like almost a inverse type Ponzi thing. So you got to remember that too. And also, I do have to admit as well, beware shorting zombies. Okay, yeah, General Motors, Ford, Stellantis, Volkswagen, will they all be around in 5 or 10 years? The answer is not in their current form, not by any stretch of the imagination. But remember, as rates go lower too, this will bring about looser credit environments. And then firms like this that have huge debt can roll debt indefinitely. When you look at the debt load of Volkswagen, it's horrifying, but it's also a family business. Also, government support, too big to fail. They can get government bailouts to buy more stock back as well. Markets are irrational. There'll be hype. It's like, oh, we're going to create a new self-driving system, or yeah, we're going to buy from NVIDIA. We're going to kill Tesla. Yeah, no, it's not going to happen. Also, timing the collapse is very difficult, but I do have a little secret for that in a second. But zombies sometimes never die. Look at crypto. It's rare. You rarely see a crypto ever die, even though nobody uses them. Okay. So they can linger for 5 to 10 years, and that will bleed your shorts. And then you have a thing called last gasp rallies, which could wreck you too. It could trap your shorts. The very good example I remember from back in the day is BlackBerry, Rhythm and Motion. It rallied 100% after the iPhone launch, and then eventually collapsed 90% to zero, almost, because disrupted firms can surge on momentum before the adoption happens for the disruptive force, which is kind of a complex thing to think about, but that's going to happen too. And remember as well, firms like General Motors may look structurally challenged by EV adoption, but unions and bailouts and cyclical rebounds, etc., can also help. But there is a key short signal, all right? If you wait for some key financial signals, for example, sustained EBIT is below interest expense, or if their bonds go too high, or the failed refinancing, etc., then things will happen fast. It'll go to zero fast. That's when you strike. So keep an eye on the financials. That's the answer there. And final part, my voice made it this week. Woohoo. Dean Martin, I think he was a famous actor. We donated to Best Friends to help support Dean Martin, and he's easily overstimulated. We know about that from the beginning of this video. Sorry about the barking earlier. So now he calls Sanctuary home. Trainers use slow, quiet methods to train Dean Martin and helps him relax, etc. So big thank you to everybody there. And don't forget DCA tomorrow. CTO is back and he's very excited. He texted me. Can't wait. Banger of a show coming tomorrow too. I'll take questions on Patreon later today as well. After this video, let's do some live questions. And I hope you all learned something. Tricky video today. Lots of technical stuff over those 50 slides. Thank you for coming. Now I've got some live questions. And thank you to the mods in the chat too. You rock. And before I get to the questions, I want to thank as well Bookhorn, Martello, Crypto Last Outpost, Dog 1A, of course, Halekela from Hawaii, the only real gray ghost, Vitruvian Life, Justice for All, Charles in Canada. Long time to see, Charles. Good to see you. GQ Trader, Vincent Jones, Swiss Guy Richie. Thank you, Swiss Guy Richie. And Vincent Jones again, Signal 103. Thank you all for coming. All right, first question is from Martino Bianco. The question about switching from construction to financial advisor. I own a financial advisor company. I'd say, hell no. I'm using Tesla and the IA9 to retire early. The regulation of UK financial advice is the biggest headache in the world. Best thing I advise is to put your time and energy into learning IDSS tools and become a trader. And if you got a decent size bag to trade with. I love that. Thank you, Martin Bianco. I don't know about the regulations in the UK, but you're probably dead right. It's a pain. It's also ripe for disruption. So I really appreciate that, Martino. Love it. Next question is from Vitruvio. What do you think the bottom is for this year? Well, it depends on the asset. Tesla could fall to low 400s. NVIDIA could fall to 150, 160. Bitcoin could go down to 70K. Solana could fall down to low 100s because it's correlated with Bitcoin. They'd be kind of some of the bottoms that I believe could happen. And I do expect, so I have a historic chart. I analyze all the black swans and gray swans over history, and I understand the cadence at which they come. So we are, in the next 3 to 6 months, we're overdue for a black swan as we go forward. Let's see if we get it. Justice for all. How will Secretary Bessent's parallel prosperity, Main Street and Wall Street fusion affect long-term asset allocation for everyday investors? They should boost domestic small cap exposure. Is interesting. So sometimes these guys, like the current administration, is very much, as they say, for Main Street, but there's no denying AI will cause huge wealth disparity. Those that own the compute, those that own the chips, etc., will have all the wealth. It's a novel idea for Main Street to get wealth and everything else, but I don't see it happening with this AI revolution, at least for the next 5 to 7 years, when everything is mainstream for people to be able to get to that abundant life. And I made a very big video on the next 7 years as well, where I do believe the next 7 years will be very bumpy. I think I made that last Wednesday or Thursday. Check that out. Remember as well, and much respect to Besant and people like David Sachs, but David Sachs still believes that AI will create more jobs. It's a head scratcher. Now, I don't know if these people are talking their political book because they don't want to upset voters, or they actually believe it, but I certainly don't from the data I look at. So sorry for the long-winded answer, Justice for all. And remember, small cap exposures, winner takes most. Biggest companies make the biggest crushing results. S&P 500 has been carried by 7 stocks for the last decade plus. That will continue. In fact, that will become even more egregious. Just look at my price prediction models I covered at the beginning of this video for Tesla. Calculate the market cap of what that means for that company, and then think about how big that will be as an overall share of the S&P 500. Then we have the SpaceX IPO coming, $1.5 trillion company, which is the same size as Tesla, by the way. So we're going to see the Mag 7 change. In fact, it'll be Musk, the Muskonomy, Musk Industries, XAI, etc. will have a big chunk of that as well as we go forward. Charles Kincannon, in your retirement model, how do we account for unknown expenses in the future and possible need for rotation? There's a couple of ways to do that. One, you can jack up your actual withdrawal amount. Imagine you plan 50,000 a year. As you get older, you can increase your 4% or 5%, whatever index you want on that, to maybe 10 or 15%. And that will help you build your rainy day model for expenses in the future. That would be what I would do. Or just keep sandbagging and build more than you need. You know, if you don't want to keep with the bare minimum of 300 Tesla shares, go higher than that. Throw in some other assets too, like Bitcoin, and that's going to be key. But that's what I would do. I did some simulation as well. Well, the beauty of the retire on model, it really illustrates the miracle of compounding. I'll take a second on this because it's so important. When you plug in numbers, CAGRs of certain assets into that model and you see across a portfolio and you see the growth, maybe in 2030, you want to be kind of still live a little kind of modest lifestyle, pulling out 50K a year. But as you get to 2031, 2032, your bag value goes through the moon. And then you can start pulling out 100, 150 grand a year, no problem, with no impact on your bag. And you'll still be able to pull from it for decades into the future and leave millions for your progeny. That's the key, everybody. That's why the importance of planning, but also how you achieve that escape velocity through disruptive assets. Very important. Thank you for your super sticker again. Bookhorn, Martello, Dogwan, Forrest, the only real gray ghost, Swiss Guy Ritchie. Thank you, Sean D, T&D, and everybody else. I'm gonna handle this question because this is something that in Cash Huddle, this has been going around the internet all yesterday. I did respond to it on Twitter. Will SpaceX be rolled into Tesla like Shamath said recently? First of all, a couple of things. Elon is very clever. He doesn't want a headache. He doesn't even want to go public, but he probably has to go public because some other people believe if there is a new administration in 2 or 3 years in the United States, they might nationalize SpaceX because of the security risk. So Elon Musk has to IPO SpaceX because if it's in the hands of the public, it's much harder to nationalize it than it being a private company. That's the first theory. Second of all, rolling it into Tesla would make Tesla an even bigger target. Elon would control robots, control autonomy, and he would control space and data centers in space, and Tesla would control all the chips. That would put too big of a target on the head. And third reason, and I love these really clever questions. Thank you, Cash Huddle. Third reason, can you imagine the lawsuits? You know, Peter Thiel, who owns a big chunk of SpaceX. I don't want to merge with Tesla. I also own Tesla over here, and the valuations will be messed up. And when you take these two great companies and you mix them together, you create what's called a conglomerate. And conglomerate returns always sucks. You get much more valuation by being independent. So I remember years ago looking at big conglomerates in India. If you spun off, say, from Tata, the consulting business, the car business, the mining business, the whatever businesses, they were worth much more individually than as a conglomerate. So conglomerates are the kiss of death, my friends. With that, see you all tomorrow morning. Hope you enjoy the show. Hit the like. I think everyone must still be on vacation from Christmas, but appreciate you all. Thank you for coming.